Hi, everybody. Jean Humbrecht with Humbrecht Law, criminal and traffic defense attorney in Manassas, Virginia. I am back with one of my repeat and favorite guests, Doug Burham from All Assured Solutions. We're going to be talking today primarily about homeowners insurance because it's National Homeowners Month. So before we get started, I just want to let everybody know who's watching. If you have any questions or comments, feel free to type them in the chat and we'll address them while we're live here. Or even if you have a question later and you're watching the replay, and one of us, probably Doug, will be able to answer that for you. So Doug, I'm going to turn it over to you. Tell everybody what it is that you do with All Assured Solutions.
Hi, everybody. I'm Doug Burham with All Assured Solutions. I am your local insurance agency. We do everything from homeowners, auto, business insurance, employee benefits. But today we're going to chat about homeowners. So you just want to, it is National Homeowners Month, and like every month, there's always a national something going on. But so Gene asked me to just chat about homeowners and why it's important and how to best protect yourself. So again, I'm Dial, Doug, whatever you want to call me, I'll answer to. And I am the founder of All Assured Solutions. So.
Okay, well, I am still sharing the video to my different profiles, but I'm going to start off by asking a very basic, silly question. Can you explain, because there might be some people watching who haven't owned a home, can you explain what exactly homeowners insurance does and why you need it?
Okay. So basic homeowners insurance, the basic principle behind it is your home typically is the most expensive investment you make in your life. And homeowners insurance is designed to protect that asset, meaning that if there's a fire or, something happens in your home, the homeowner's policy will pick up, depending on whatever your deductible, and rebuild your home. Let's just say your home is totally destroyed. And none of us, okay, there might be a couple people watching right now, might have $5 to $1 million sitting in their bank account. But homeowners insurance will cover that expense to rebuild your home and get you back to where you were before that fire or that major disaster happened to your home. So you want to look at different avenues of coverage. Let's just say you have a dog. Your dog bites somebody. There's some liability coverage involved in your home. Someone slips and falls and decides to sue Jean because they want to see how good of an attorney she is because they slipped and fell in her home. Your homeowner's policy will have some liability coverage. These are all basic coverages that come a part of the homeowner's policy. You'll have many different options and coverages. I mean, they even offer identity protection in homeowners policies now. So you can get a little bit of coverage there. You can get, again, you're going to have a coverage. Let's say, go back to that major scenario where you're out of your home because of a fire. Your home is totally destroyed. There's a coverage called loss of use, meaning they're going to give you some money to go stay somewhere else because you can no longer use that property to stay in. So those coverages are the majority of reasons why you should have homeowners. First and foremost, if you have a mortgage, the mortgage company wants you to have a homeowner's coverage because they're the ones that are putting out all the money. Mm-hmm. So they want to make sure you have it. So, and of course, there's a couple of us out there that don't have a mortgage on their home. So it's your choice to have coverage in there. But, for $1,000 or $2,000 a year on average for a homeowner's policy, it's well worth to have that because, again, I don't think many of us have a couple $100,000 in our bank account to repair our home if something major happened to it. So hope that makes sense. But Jean, do you have a question?
I do have a question, but the first thing I wanted to say regarding the slip and fall is I know who I'm not inviting to my housewarming party.
Well, unfortunately, I can't make it, but I wouldn't sue you anyway.
Well, thank you. It's actually going to be rescheduled because, with having a home, there are a lot of things that you need to do, and some of those things are just not done yet. But so regarding, for example, if there's a fire, like a time where you're going to need your homeowner's policy to kick in, does it put you at status quo as to where you were with the home prior to it burning down? Does it build you a whole new home? I mean, do they value what your home was worth at the time you lost it? How exactly does that work?
All the above. So let's just say, let's use your place for example. You live in a condo. You have two different policies. One, the condo association has a policy for the building. Your policy is going to cover everything inside the walls of your policy. So, worst case scenario, both of your let's say your whole building goes up, and of course, Gene, I'm not speaking that into anything, but if both policies are going to cover it, and they're going to get you back to where you were. So they're going to give you have loss of use coverage. So they're going to give you a place to stay while they're rebuilding it. So your home will be put back the way it was. So let's go use an example of an older home, a home that was say built prior to 1960. There's coverages that you can put in place on a homeowner's policy to, if the worst case scenario happens and the home is totally destroyed, they're going to get it back up to current code.
Mm-hmm.
Not so in this case, it's going to be a little bit better than it was before the fire. Does that make sense?
Mm-hmm.
Because you're going to have new codes, you're going to have new wiring, new everything based on today's code versus old codes. But again, that's a coverage you have to ask for. Most insurance agencies will recommend it to you when they look at you home and quote your home. Because again, the only cost to you typically is your deductible.
Mm-hmm.
So going back to your answer, I think this will help answer your question is yes, it'll get you back to where you were before the incident happened, the accident happened. And I hope that makes sense.
Kind of.
Okay.
I'm still not entirely clear. So I understand the loss of use. Is that something that's included in all policies, or is that an extra that you have to add on?
No, it is included in all policies, and it's based on a percentage of whatever the value of your home is.
Mm-hmm. Okay, so I understand that part. Now, regarding, let's say, a home, I think the fire example is just the easiest, and then maybe you can give us other examples. But say a house totally burns to it's just destroyed, and it's an older house, and they rebuild it. So they rebuild it to look as close to the old house as possible with there are changes in the OSHA codes and everything, but they basically try to recreate what you had prior to it.
Correct.
Okay.
With all the new codes in effect. So
Okay.
whatever the state says the law, have to have in that home, then they're going to put that in the home. And that's where, again, having that coverage added to it will pick up, so you're not picking up that cost, because they can't rebuild your house without that code. Once it's older and it's now brand new. So again, most insurance agencies are going to make sure you have the coverage, and maybe even skim over it a little bit when they're selling it to you, because maybe they go, it's just a part of the policy that I highly recommend. Because again, it's one of those things that most of us never go through the major issues. Like, going on that thought, homeowners policies are designed for when accidents happen, right? So homeowners policies are not designed to cover maintenance. So, you have a wind or hailstorm out there and your roof gets partially torn apart, then you can use the homeowner's policy to help you with your roof. You don't want to use your homeowner's policy just because the roof looks horrible now. Does that make sense? And there was no wind or hail damage anytime, and then you called and have it. So that's not what insurance is for. Insurance is help to get you back to where you were before an incident happened, like wind or fire, hailstorm, something like that. Does that make sense?
That That does make sense. So if somebody's contacting their insurance company, there has to be a documented um, destruction in some capacity to the house or
Correct.
part of the house.
Correct. And insurance companies have, just like all of us have access to all this new technologies out there, insurance companies know exactly where a storm hits. They can go back years and figure out, was this storm big enough
Mm.
to have created this damage? Does that make sense?
Mm-hmm.
Where the technology is there. So don't call the insurance company. Talk to your agent first.
Mm-hmm.
Discuss what's going on, and then you and the agent can decide, do you need to turn in a claim? Again, because I have a lot of my clients that will give me a call and say, hey, Doug, tell me, this just happened. What do you think? Well, a lot of times you can get a company out there to fix it, whatever happened, for less than your deductible or close to the same dollar amount as your deductible. So you don't want to call the actual insurance company to turn in a claim, because then you have a claim against you and then there's no payout. You've gained nothing, but now you have a claim against you, which can increase your rates for the next year.
Mm-hmm.
So
Now,
always
regarding,
discuss.
oh, sorry, go
No,
on.
go ahead.
Regarding the deductible, is that an annual thing? Let's say you have bad luck and four big bad things happen to your house and you reach your deductible on the first one. But
It's
then the
per
next,
incident.
oh, okay.
So the deductible is not for the term of the policy. So let's just say you have someone's come in your house and they slip and fall and your cabinet's destroyed and it's going to cost you a couple $1,000, just say whatever. Well, there's a deductible for that incident.
Mm-hmm.
2 months from now, wind and hail comes in and destroys your roof. Then there's a deductible for that incident.
Mm-hmm.
So it's not 1,000. If your deductible is 1,000, it's not 1,000 for the whole year. It's
Mm-hmm.
per incident. So
Okay.
but that literally means, Gene, that again, let's just say you're paying $2,000 a year for your homeowner's insurance policy. If your home is destroyed and they repaired it in that first year and you just paid $1,000 to have your $400,000 home repaired, that same policy, if it happened again, for another $1,000 will repair your home. So that, in theory, could repair your home twice for $800,000, and you've spent your insurance policy of $2,000 for the year and the two claims. So for $4,000, you've had your home, in theory, rebuilt twice.
Mm-hmm.
Does that make sense? Like that?
Yeah, that makes sense. Sounds more like a story you see on Forensic Files. He
Yeah.
had the worst luck. His home burned down twice in 1 year.
Yeah. That typically, I don't think I've ever seen it, but I'm sure it's happened before.
Yeah.
But
Now, so obviously we're talking about catastrophic things that don't happen to most people. What are some common occurrences that people would use homeowners and their policy for, that call you about, like, should I contact my insurance
well,
company for this?
go back on the thought process of wind and hail. Wind and hail can destroy your siding, your roofing. It can knock out windows. A kid could throw a baseball through your window, okay, and your homeowner's policy could cover that issue. Again, depending on how it's written. Typically, if you see the kid do it, you want to go to his parents and get the parents to pay for it. But let's just say you come home and all your windows are busted out for vandalism or something like that. Your homeowner's policy can cover that stuff.
Oh, okay.
So
So
there's lots.
it's not just
Theft.
of God. Okay.
Yeah.
Oh, okay. Well, that's a good, yeah, I'm glad we brought this up. Theft. Why don't we talk about that?
Yeah. I mean, even like say you have your laptop, your personal laptop in your car, and that's stolen out of your car. Your homeowner's policy will actually cover that, not your car's policy, because it's personal property, and personal property is covered worldwide on your homeowner's policy.
Huh.
So there's a lot of different things can happen. And again, I mean, you're talking a laptop. Laptops now on average aren't that expensive. I mean, you get some really good ones. You can spend a lot of money on them, but depending on what your deductible is, you're probably not going to turn in a claim anyway. But if something were to happen,
Mm-hmm.
you know, a tree falls on your car, is it the auto policy that covers it, or is it the homeowner's policy that covers it?
The computer that's in the car?
Yeah.
Well, I
Or
guess from
or
what
in
you
general, the homeowner's policy is going to fix both of them because the tree is as part of it's on the home, so it falls on the car. It's going to repair the car. Let's say your tree in your house falls on your neighbor's car.
Mhm.
Your auto policy is going to cover it. Your homeowner's policy is going to cover it.
Oh, so okay. So if something happened on my property, storm, tree gets knocked down, falls into my neighbor's roof or my neighbor's car, my policy will cover that damage. And I'm only responsible for the deductible. My
Correct.
homeowners. Okay.
Correct.
Okay.
Now, if you
They
get
had-
it, and again, there's so many different things it can cover, and we could sit here and go hypothetical this and that.
yeah.
That's why I always say call your agent first.
Mhm.
Don't call the insurance company first, because again, I'll use an example. I had a client years ago, actually before she became my client. She became my client because she was being non-renewed.
Oh.
She lived in one home, and she called the insurance company to have her garage door fixed. She meant to call the home warranty company. So homeowners insurance, zero payout, but there's a claim turned in.
Oh.
She made the same mistake in her other home. So within a few years, she has 2 claims turned in and zero payout. Doesn't matter how much they pay. Yes, obviously it's worse for an insurance company if they pay out a lot more money.
Mhm.
But when they see that, then a homeowner's policy can non-renew you. If you have some companies, each company in each state's different,
Mhm.
but if you have 2 in a certain amount of time, they can non-renew you. So
Wow.
this friend actually called me after all this was going on and said, I don't understand. Whatever. We had to put her at a higher rate for a year
Mhm.
with another insurance company until one of those claims dropped off. So that's why I always say call your agent, discuss what's going on, because your agent knows enough folks that can get out there and look at your property to see what needs to be done before we turn in a claim. And if a claim needs to be turned in, most of those guys can help you with the claim process. You know plenty of folks that do the home restoration work, and that's who I would recommend is a company like that go out there and look at your property, and they'll help you walk you through the claim. And they'll not only will they help you walk through the claim, they'll help you get more money, as much money as possible for the insurance company to help take care of that stuff.
Uh, that brings up another question. So say you do need to submit a claim. Can
Mhm.
you use whomever you want to fix the damage, or do you have to use somebody that does the insurance company have to approve the repair person?
You can use whoever you want within reason, meaning just because you want to use me, I'm your repair guy, whatever, doesn't mean they're going to pay my whole bill, because my bill could be unjust. It could be higher than
Mhm.
what the actual work. Because again, they have all the tools. They know what it's going to cost to do a certain job. They can punch everything because all these guys use the same tools.
Mhm.
They all know roughly how many hours it's going to take until they get into the job or whatever. And if like for example, we're talking about homes right now, but my car's at the body shop because I got rear-ended last week, right? So I dropped my car off. I already have an estimate done. They pull the bumper off, and then they find out, oh, there's more damage under there. So then the body shop now calls the insurance company and says, okay, we found this. Now we need approval for this. Same thing with your home. You could have a company come out there, and all of a sudden they find out that this wood's dry rotted and they
Mhm.
need to get more money. So they let them do all that stuff for you, because you and I, for the most part, don't know how to handle I mean, I do because I'm an insurance agent, how to handle insurance companies, and again, not to get off the topic of cars, but I literally went and dropped off my car and they didn't have the car assigned to me ready. So they upgraded me and then they tried to charge me for the upgrade. I didn't ask for an upgrade. I said, the truth is they should have given me what they gave me anyway, something comparable to what I drive. But I called my claims person who is at a company I don't represent. And I said, listen, they gave me this car. I don't want this extra $15 charge. You guys need to eat it. And they took care of it. But that's what these other guys can do is by use people to help you, is what I'm getting at. And just using the car example only because it's fresh in my mind because literally I just dropped off my Jeep on Monday. So, but anyway, going back to the home, what other questions do you have?
So say you've got a company that you want to use to repair your roof. That company will know how to communicate with and we're already submitting a claim. We're already at that point. That roof company will already know how to deal with the insurance company to ensure that they're going to get paid. They're going to say, this is the estimate. And then the insurance company is going to say yes or no. Is that how that works? Okay. Okay. Right. So they handle all of that after they talk to you, after your insured person talks to you, the company deals with the insurance company, the repair company. Okay.
And kind of give you an idea. If they tell you, if you ask for someone to come out and look at your roof and they don't know how to deal with their insurance company, run. Because they're crooks. They don't know what they're doing. They're just trying to get as much money from you as they can. Because every respectable business knows how to work with the insurance company. This is part of their jobs. Like you'll literally have some of these guys running around the neighborhood after a hailstorm. Hey, let me look at your roof. Let me look at your roof.
Yeah. Just trying to make quick money.
Right.
And so the insurance company will obviously will be able to know if the person's licensed, bonded, and insured themselves. Okay.
And you can find out all that information about a client too, or someone that you want to use, because the information's out there. And I would ask if you're ever having any work done on your home. And again, this is about insurance, but if you ever have any work done on your home, I would ask the business coming in to do the work for what they call certificate of insurance. That's proof that they have insurance. And on that, they'll list general liability, workers' comp, all the insurances that they have. And you have the right to ask for that before someone comes and does work in your house. Okay.
Another question that I have, because this came up with my home, appliances in the home that break something I know your answer, but say something in the house, breaks. Your dishwasher just stops working, your refrigerator. Well, let's say, for example, something stops working and it's causing a leak into somebody else's home below you. Will your homeowner's insurance cover something like that?
It can, if you have coverage for it, because again, these are endorsements you can put on there. There's endorsements like sump pump, water backup, coverage options that don't automatically come on a policy. But again, most insurance agents will recommend it to you. So the answer is yes, it can be covered. And there are some companies that will have an endorsement for your appliances. I typically don't recommend putting on appliance coverage on your homeowner's policy. Reason being is because you don't know when you call in the person to turn in the claim, do they put it in the right category right away? So appliances can be considered on a homeowner's claim. So there are companies out there that'll sell you a warranty and get a separate homeowner's appliance company policy versus your home. And then that doesn't affect your home rates. Does that make sense?
Oh, okay. So you can add it on to your homeowner's policy and it could be covered depending on if your policy,
right,
what the language is, and it covers it, but it's going to count as a claim against you. And if you had that separate appliance warranty, you can use all the claims you want, but you're not going to need to worry about your company dropping you when your roof caves in.
Exactly.
Okay.
Exactly. And again, that's why I always recommend just discussing, with the agent that you're working with, what your coverages mean and how everything works, because each company is different on how they handle stuff. Some companies, when it comes to an appliance claim, won't count that as a homeowner's claim if it's written in their homeowner's policy, because a lot of them are doing it. But again, it's like jewelry policies. I recommend separate ones away from the ones on the homeowners, because again, you could lose a piece of jewelry, or it could be stolen. If it's written into the homeowner's policy, that can count as a claim against you. Not always, but it could. And if you had a major issue with the home, then all of a sudden you got two claims. Does it make sense? Again, it all depends on the company, because each company writes it differently.
I think I got a little lost there. We're talking
Okay.
about jewelry, but also earlier you mentioned theft. Someone breaks into your house, breaks into my house, steals my jewelry, steals. I got lost somewhere. Why are
All right.
there
So
complaints?
on that thought process, every homeowner's policy gives you some jewelry coverage.
Uh-huh.
Okay. It could be up to $2,500 in jewelry coverage. In a lot of cases, sorry, women that are paying it, some of your rings are worth way more than that. So
Mhm.
you schedule jewelry to the policy. Say that ring that you have is worth $10,000. Okay. Homeowners policies, you can schedule the jewelry to that policy. So if it's stolen, the homeowner's policy is going to give it. I personally just recommend getting a separate jewelry policy, because again, if something like that were to happen, it doesn't affect your homeowner's policy. Does it make sense? Because at the
Yeah.
end of the day, a claim is a claim, and depending on how the situation is written up, because when you call the insurance company and you say, I want to turn in a claim, that's the first thing they say. What's your homeowner's policy number? And they put in a claim. Even though it may turn out it goes on a separate category that should not affect your claim on your home, because it is a piece of jewelry that was stolen or something like that. Again, every company is different on how they handle it, but so I typically recommend getting a homeowner's policy, get an appliance policy for yourself, and a jewelry policy, and separate them.
Mm-hmm.
That way, neither one of those other two can affect the home policy.
Okay.
Just for protection.
I'm with you, but say somebody breaks into your home and you've got a bunch of different things stolen.
Mhm.
Like you've got, electronics, my computer, jewelry. Um, wouldn't that just be one big claim that I would only
Yes,
be worth? Okay.
it is one big claim, but that's where I guess I'm confusing you a little bit, is because on your homeowner's policy, which we didn't actually discuss, there is what they call personal property coverage.
Uh-huh.
And that is a percentage based on the home value. And
Uh-huh.
if you have more, you can ask for more.
Mm-hmm.
But again, when you get into the expensive jewelry stuff, you want to schedule that separately and keep it away. But yes, your personal property, your TV stolen, your jewelry box is stolen with $20,000 worth of jewelry. All that is going to go, if this all happens at this one time, it's all going on one claim. But
Well, let me ask you a question.
Mhm.
Not that I don't have $20,000 worth of jewelry, but it's just making me think. So say your homeowner's policy covers like up to $2,500 in jewelry, right? But your jewelry is worth $20,000. Um, let's say you don't have a separate jewelry policy. Will the homeowner's policy at least cover up to the 2,500 that it covers, and then you're just out the rest of it?
Correct.
Okay.
Correct. That's
Okay.
the short example and answer, because you're limited. Like you're breaking down in each policy, depending on the company, will break it down. Jewelry, fur, fine art, all these kind of items. and they all have a dollar amount attached to it that comes, for lack of a better word, standard with the policy.
Mm-hmm.
You can ask for more, and if it's more convenient to put everything on one policy for you, so you pay one bill, that's the way you do it. My personal recommendation is, if you got jewelry like that, get a separate jewelry policy.
Mm-hmm.
And just list everything out. You need appraisals. If you got most companies somewhere around that $10,000 range, they want to see an appraisal. If you just bought it and you got the receipt, that will work for a lot of things if you just bought it recently. But a lot of these companies want to see appraisals, and then they're gonna give you that dollar amount, and then you can pick whatever deductible you want on those. And again, those coverages are worldwide. So it's not if it's just stolen in your home. Let's just say you're sitting on the beach and you were working, and then you decided to take a break. Your laptop was left there, and you took all your jewelry off and left it there, which most of us don't do, but people do. People will just take all their stuff and go jump in the water, and they come back and everything's gone. If all that stuff was written out on your homeowner's policy, it would cover it.
I'm glad that we're talking about this. I honestly didn't think we'd talk for 31 minutes so far just about homeowners. But I mean, this is a lot of interesting information that I didn't even know or think about myself. And I think a lot of people, well, I mean, I would hope, because I hope I'm just not an idiot. But I think a lot of people wouldn't think about that. Like, why would your jewelry be covered when you're at the beach? So instead of, I want to talk about whatever, big things you want people to know, but there's no way that we could talk about every possible thing that you could cover. So I guess to kind of streamline it, can you just tell us the other big things that people might want other policies for aside from jewelry?
Well, I think at the end of the day, start with a homeowner's policy. Have your basic coverage in place. Okay. And when I mean basic, protect your biggest asset. Okay. If you have a bunch of expensive jewelry, then you should schedule that jewelry on either your homeowners, however you prefer to do it, or you get a separate jewelry policy. There's plenty of insurance companies out there that'll do it. There's a lot of folks out there that have comic books that are worth a lot of money. Well, your homeowners will give you some coverage for them, but they don't know how to really cover them there's companies that are called, there's a company called Collectibles that are specifically designed for collectible items. You could get a separate policy for that. At the end of the day, whatever you think is important that needs to be protected, talk to your insurance advisor and ask them, should I have this here? Would it be better off here? And get their opinion, because my opinion is just one person's opinion. I just believe that if you've got something worth value and you can't just afford to cover the expense when it walks away, disappears, whatever, then you should insure it. And I hope that makes sense, because that's what insurance is all about, is getting you back to where you were before it happened. And the only thing you would pay is your deductible and time for it to get, because obviously just because you have insurance doesn't mean your house burns down today and you snap a finger and it's built tomorrow. It doesn't happen like that. But could you imagine if your house burned down, you didn't have insurance, you didn't have a couple $100 million in the bank to have it built back for you, and you could go have enough money to go live somewhere else while it's being done? That's what insurance is for. That's what insurance is designed for, that what if issue. You got a dog, it bites the neighbor, your neighbor decides to sue you. If you've got some liability coverage on there, oh, and by the way, if you have a homeowner's policy that's aware you have a dog, and they like the fact that you have a dog, because there are some insurance companies that won't give you coverage if you have a certain type of dog. But if your dog bites somebody and your neighbor's suing you for all the medical bills and whatever they want to call anxiety time and all that, if you have at least $500,000 in liability, then you have something to protect you and you're not coming out of pocket. All your money minus your deductible, all that kind of stuff. But that's what insurance is about. Insurance is designed to protect your assets, like your car, your home, your business, your employees, your life. I mean, if you own a home, and I'd have a life insurance policy, because God forbid you own a home. Like, okay, for me, I'm married. If I were to die today, I would want to make sure my wife, obviously she's going to be, well, okay, depending on what day it is, she might be happy or no, I'm just kidding. She's going to be distraught, well, if I have a life insurance policy in place, we can take some of that money, pay off the house so she doesn't lose the house. And then she can also have some money to take some time away from work and get back to where she was. So I recommend a life insurance policy. I think whether you get it through me or anybody else, you should talk to somebody about having that extra added protection. You got kids, whatever, you want to make sure they're taken care of in case you're not there, because at the end of the day, we're all invincible, right? We're not going to die. So we all think, but you got to protect yourself. So protect what matters most. That's quite honestly is my motto. Protect. Can't even speak now. I'm speaking too long, Gene. Protect what matters most. And it's not what matters most to me. It's what matters most to you. Now, for a lot of us, the mortgage, you got a mortgage. The mortgage says you got to have a homeowner's policy insurance. Okay. Everything else is your choice. You want to protect your jewelry, your other assets, that's on you. That's your choice. But you have a mortgage, you got to get a homeowner's policy. Personally,
I was going to ask that. Is that does every mortgage company require a homeowner's policy?
Absolutely.
Okay.
Because think about it. You're making a monthly payment to them for your mortgage, right? They're the ones that wrote a check for $200, $300, $500, $1 million. Well, if that house is gone because of a fire, they want their money back. They want that loan paid off, and anything after that loan is paid off, you get that, get that house built back up, so they're going to get covered. They want that house rebuilt.
That leads me to another question. And I'm not really sure how to articulate this. Say you still owe money on you still have mortgage payments to make, but something catastrophic happens to your house. Oh, it's two questions actually.
Yes, you still make the mortgage payment.
You still make the mortgage payment on your house that doesn't exist.
Yes,
being rebuilt.
Correct. They still want their money. If the house, if it's determined that the house can't be rebuilt, hypothetically, this is a hypothetical situation, then the money will be taken to pay off the mortgage, and then whatever happens to the land, whatever. That doesn't happen like that. But yes, you want to continue making your mortgage payment because that'll affect your credit. But you're going to get loss of use money to go stay somewhere else until the house is livable again. Because you're going whatever. Again, it's I want to try to think your policy. Let's just say your policy's got $80,000 worth of loss of use on it. $80,000, that's going to give you some food money. That's going to give you a place to stay, clothes if you need it because you lost all that stuff. Honestly, quite honestly, 80,000 might not be enough for 3 or 4 months. But yes, you continue to make your mortgage payment, because at the end of the day, the insurance company doesn't make your mortgage payment for you. You continue to make it because you're still working. The insurance company is going to give you a place that, you can rent a place while it's being done. They're going to give you money for that, depending on whatever your dollar amount is for loss of use.
Okay.
So what was the other question on that?
So you can't live in your house. It's not livable. The insurance company is conceivably giving you enough money to live on in something comparable, I would assume, while your house is being fixed. You still need to pay your mortgage, but it just seems to me like you, as the person who lost their home, is out more money because you have to keep paying the mortgage payment, and you might not have enough money to live in something comparable with whatever the insurance company gives you. Maybe I'm not understanding.
Well, you could be correct. Okay. They're going to give you a place to stay. You can pick the place to stay. They're going to give you an allotment of money. So whatever your dollar amount is, the insurance company is going to give, but you still are going to pay the mortgage because that really has nothing to do with the home itself as far as you still owe that debt, right? Because let's say you decide you're going to sell the house after it's rebuilt.
Mm-hmm.
Okay. If you don't pay that mortgage off, you may not own that house by the time it's rebuilt to sell it yourself. Does that make sense? And then you get the profit of the house. Because let's say your mortgage payoff is 200,000. Let's say the home's worth 300,000, right? If you don't continue to make the mortgage payment, and let's just say, God forbid, it takes a year to get your house all redone, and you decided I'm going to buy another house, right? But you need that house rebuilt to sell. If you don't continue to make that mortgage payment, a year from now, it's already been 90% chance it's being in foreclosure, right? And then that $100,000 of equity that you used to have, you don't have anymore. That's why you want to continue to make the payment. I mean, you always want to, even if you don't have that much equity, because you want to still own the property when it's redone. Does it make sense like that?
Yeah. No, I'm not encouraging anyone not pay their mortgage.
No, I get that, but I'm
I
just
was
saying,
just thinking financially.
it just feels funny, like you're paying twice, like you're paying for the mortgage, but the money from the insurance policy is paying the second spot. So you're really not coming out of pocket there. Does that make sense? Like that?
So you're continuing to invest in your property that you're either going to keep or sell.
Right.
Okay. Well, I'm not going to ask all the questions that I had, but I'm going to try to sum up my final question because I know we started a little late and we've already talked for 41 minutes about homeowners. And I know, Doug, we're going to talk again about specifically auto insurance. But I think this was really helpful. I learned a lot of things that I didn't even know. So I guess my final question would be, what would you like to tell people that are listening the most important thing to know going into setting up a homeowner's policy, and maybe questions they should ask their insurance agent, like the jewelry, for example, and other things like that we might not necessarily think about, add-ons.
Right. So my thing would be, ask your advisor, tell them everything you have. Let them come up with a game plan that fits your needs to discuss. Like, again, not all of us have hundreds of thousands of dollars of jewelry. Okay. I mean, I have a client that's got like $176,000 worth of jewelry. Okay. And we literally sat down and we discussed it and got appraisals done and all this kind of stuff. Okay. That's I don't think is the norm. Right. But at the end of the day, really discuss with your advisor what you have and what your goals are, what you're trying to accomplish. Because at the end of the day, insurance is a tool to use to protect your financial situation. And what I mean by that is, whether it's your home or your car insurance, I think most people look at insurance as a bill. And if you look at it like I look at it now, as a tool to protect me financially, because again, if I own my home outright, I don't have $500,000 sitting in the bank to cover it, have money just to float and say, oh, my home just got destroyed. Okay. I'd rather spend my $900 a year on my homeowner's policy for that worst case scenario. Okay. To pick up and get my house back to where I was when whatever happened. Same thing with the car. We don't plan on having car accidents. I mean, I got rear-ended. I didn't fault the young lady who hit me. I mean, I'm glad she's okay and we're all both okay, whatever. But it's an accident. Well, her life shouldn't be ruined because her financial life, because her car's total. Mine's not. I mean, mine's going to get about $5,000 worth of damage. Again, I don't have $5,000 just to throw out my car just because I want to. So I guess the long story I'm getting into the end at is, insurance is designed to protect you and your assets. Because at the end of the day, pardon my French, stuff's going to happen. I almost said the other word. And you want to have insurance to protect you for when it does, because we don't know when it's going to happen. And at the end of the day, whether you're paying $1,000 a year for your homeowner's insurance policy or $5,000, I'd rather pay that every year. And if the worst case scenario happened, my $1 million home got destroyed, for less than $6,000 a year, I can have that $1 million home built. That's an investment in my eyes. It would be a horrible investment if I didn't have insurance and I had to rebuild my $1 million home. And that's what insurance is, to get you back to where you were before the accident happened and protect your financial future. And most of us, I don't think, look at it that way. Most of us look at his insurance as a bill. It costs too much. Health insurance costs too much. Homeowners insurance, auto insurance is way too expensive. I get it. Nothing's cheap. But these are tools to protect us financially, physically, mentally, all of the above. And I hope that makes sense.
It does. And I think that was a really good way to end. And if people got nothing else out of this conversation, talk to your insurance agent or an insurance agent. Call Doug, because I mean, Doug's great and Doug helped me out a lot. But talk to an agent about your specific, and Doug, you correct me if I'm wrong, about your specific needs, specifically with a homeowner's policy we're talking right now. And they will suggest a policy that they think is best for you. And if you need any additional separate policies, and then I would say take their advice, because they know what they're doing.
Right. And I couldn't have said any better, because at the end of the day, insurance is not a one size fits all. Everybody's different. I'm a little taller than you, Gene.
Little bit.
Just a little bit. But we're all different. We all have different assets. We all have different things. It's like, some of us own cars and homes and boats and airplanes and all that kind of stuff. Well, we didn't even get into umbrellas, but that's another story. We could talk about another time. But there's so many different avenues. And again, what is important to you? I know it's hard to get over the aspect that, God, every month $150 comes out of my check in account to pay my auto insurance, whatever the dollar amount is. Maybe it's $300 in your household. I don't know. And it's a bill you hate paying. You'll feel happy. God forbid you have to use your insurance. You'll be glad you paid that, whatever the dollar amount is, because it will help you out. And don't get me wrong, some claims adjusters aren't happy people. I mean, they're dealing with unhappy people all day long. Give them a break a little bit. You're in a bad situation. You don't know what they're going through when you called in to turn in your claim. But at the end of the day, their ultimate goal is to get you back right where you were before you started the accident happened. So call your agent before you call the insurance company if something happens. So discuss it with him or her. Discuss what your financial goals are and what you want to accomplish, and they can develop a plan to fit your needs. And if they don't, call me. Just kidding.
Well, I think everybody should call Doug. He's just so informative, and all Assured Solutions, he will literally help you with all of your insurance needs. And if for some reason he cannot, he will connect you with somebody that can.
Correct.
Right. Okay. All right. Well, Doug, you can hang on for a second once I end the live broadcast. We've been going for 50 minutes I talked just as much as you did because I had a lot of questions, but I'm glad that I asked because, owning a home, you need to know these things. So thank you very much for agreeing to come on. And
Sure.
we look forward to seeing you again when we specifically talk about auto insurance, and we'll probably end up talking for 2 hours. But anyway, thanks for coming. Have a good day. Bye, everybody. Thanks for tuning in.